So you're planning on leaving that beach house on the Jersey Shore to your brother along with an investment account. State of New Jersey is going to be expecting inheritance tax of over 300 grand, and we're going to walk through that example right now. Welcome to the Mullooly Asset Show. I'm your host, Tom Mullooly, and this is episode number 338. Thanks for tuning in. New Jersey doesn't have an estate tax anymore after 2017, but what they still have since 1892 is a New Jersey inheritance tax. And pretty much everybody who inherits something is going to fall into a couple of different buckets, and some folks are going to wind up paying inheritance taxes. So New Jersey has broken people into, depending on who you are, into different buckets. So they have a Class A, a Class C, a Class D, and then a Class E. So Class A is your children, your grandchildren, your great-grandchildren, your parents, even your grandparents are all part of Class A. So if they inherit any part of your estate, there is no inheritance tax that's going to be due when they inherit these assets. However, if you're in Class C would be people like your siblings, so your brother or sister. It could be a half sibling, a half brother or sister. It could be a son-in-law, daughter-in-law. In these situations, there are inheritance taxes that will be due. And the rates, we're going to post the brackets up so you can see them. From $25,000 up to $1.1 million, the inheritance tax rate is 11%. It goes up to 16% once you reach 1.7 million in assets. And like we said earlier, if you own a house on the Jersey Shore and have a brokerage account, you may be inheriting from your brother or sister something that's, say, $2 million. The inheritance tax rate on that is 16%. On $2 million, that's $320,000 the state of New Jersey is going to be getting. So you really need to think about how these assets are going to be passed out after you pass away. And this is not chump change. State of New Jersey a few years ago brought in $350 million in revenue just from inheritance taxes. So it's big business for the state of New Jersey. So we've talked about Class A and Class C. What about Class D? Class D is pretty much everyone else. It's a niece, it's a nephew, it's a cousin, a friend. It could be your fiance. They also will have inheritance taxes. From up to $700,000, the rate is 15%. If you're inheriting over $700,000, it's 16%. These numbers get steep very, very quickly. What's a Class E? A Class E would be a nonprofit or a charity. They don't have any kind of inheritance taxes. Also, if you get a gift from someone through an estate for something less than $500, there is no inheritance tax. And also, if you are the beneficiary of life insurance from someone who lived in New Jersey, you're not going to have inheritance tax with that. The inheritance tax is normally paid by your personal representative of your estate. So the funds come out of the estate. It's not something that they're going to have to pay federal income taxes on. Usually, if you're inheriting something like this, you get the net result. But it's important to know these things are going to be happening once you pass away, or if you're involved in the inheritance process. If you're a Class A beneficiary and there's a brokerage account involved, you have to fill out a form called an L8. It's available on the state of New Jersey website. It's a couple of pages. It's pretty easy to fill out. Everyone else is going to have to get inheritance tax waivers. It's not something you really want to get involved with. Anyway, There's a lot of questions that come up. We get asked all the time about inheritance taxes here at the office. If you've got questions, reach out to us. We'd be happy to help you out. That's the message for episode 338. Thanks again for tuning in.